Okay, what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Meta stock because the stock is down over 8% today. If you don't know, this is a stock that I've owned for many years. I started buying this probably in 2019 or something very early on. I've always been an investor in this stock. It's made me lots of money, and I was buying it when it was $100 a couple of years ago. I've always owned this stock. So right now I have 5 shares, 630 bucks. As you can see, I'm down almost 13%. So personally, I think that I'm not going to buy this stock. I'm not going to buy more shares just yet because I think, let's say there is a possibility the stock goes to like 500 bucks. Then I would want to buy more shares. But right now, I already have a bit of a position and I'm only down 13%. So this thing could jump right back next week. But let's break down what is happening. Is this stock a buy? The first thing is today, the news is that the jury finds Meta, YouTube negligent in social media addiction trial. Okay, this is literally like if you're new to the stock, maybe this is something that you might be wondering about. But if you've been in this stock or you've followed the company for, at least 5 years, 10 years, you know that this is something that always is happening. There's always these cases. They've been through this 1,000 times. And it's just something that happens. Maybe in the short term, it hurts the stock price like it did today, but it doesn't, it only lasts a very short period. It's not going to last, a year or something like that. It's very short term things and they don't last very long. The only thing that did hurt the stock price significantly was in 2022. We did have a crash. The market crashed, but the other thing going on during this period here was that they were investing. They said they were going to invest $100 billion this year into the metaverse. That was something, and they were going to have, the cash flow was going to be bad and all this stuff. That was something investors did not like, and they sold off the stock for that reason. That made the stock go from $370 down to 90. That can happen. But in this case, right now, like this is all you're going to get. You might get a 10%, maybe a 20% drop in the stock. You're not going to see the stock go down 70% from these cases, though. So I mean, if you don't know, Meta is they have one of the biggest moats in the universe. Anything you could possibly imagine. This company has half of the world's population using their services and their products. Not only is that, I mean, owning half of the planet's attention is something that pretty much only they have, and it doesn't get more valuable than that. So there's that piece. I mean, right off the bat. But then you have the fact that they're making their own chips, and they got Meta, Instagram, WhatsApp, and Messenger. Um, I mean, we could take a look at their numbers here. They did $200 billion last year. They're growing at 22% per year, which is phenomenal. They're growing average revenue per user, $57 per user. That's crazy. They're up to 3.5, over 3.5 billion people now. Net income and free cash flow did take a dip, but now it is coming back up. They did 60 billion in net income, 46 billion in free cash flow. Cash to debt ratio is pretty healthy here with 81 billion in cash, only 58 billion in debt. And they paid this small dividend now, which is funny because this is not typically this is still a new thing to me that they're paying a dividend. Um, then you have shares outstanding. They're still buying back shares. Return on capital, they are at 27%, which is pretty much just the average of what they normally do. Profit margins of 38%, which are just phenomenal. Those are very high margins for any company, and those are, again, those are pretty close to uh, the top. Then we look at here's the price to sales. Price to sales is definitely on the cheaper side at 7 times, not in general, but relative to just what the stock normally trades at. But as you see, the stock can come down to 2 times price to 2 times sales. So I'm not saying that's going to happen anytime soon, but it is possible. This was peak, depression though. This is peak negativity in the market between the crash and the AI thing. I don't think we're going to have that. I could see a price to sales of like maybe a 4 or 5. I think if we have a crash, it could come down to that. I don't think it's coming down to a 2. But at the same time, look at the last couple years. The price of sales is still it's pretty. I'm not going to say it's super cheap. It's not at like a record low, but it's safely it's healthy and it's relatively cheap. Free cash flow yield, same thing here. It's been higher, it's been lower, so we're somewhere in the middle. It's definitely on the rise here, but it's 3%. That's like average, nothing crazy. Price to earnings. Um, it's similar. Again, we're definitely on the lower side now because this stock normally trades at 30 times earnings and now it's 23. So it's definitely cheaper than normal, but it's been cheaper too. I mean, again, you look at even last year, it was at 18 times earnings. So it can get cheaper from here. And that's another reason why I'm not jumping on this stock like crazy right now because it could get cheaper from here. A New Mexico jury ruled that Meta harmed children's mental health and safety by allowing minors to access to AI chatbot companions. Okay. Flagged as capable of sexual interactions, ordering Meta to pay $375 million in civil penalties. Okay, let's see. Is that a lot of money? Well, it would be a lot of money for pretty much anybody, but besides Meta, considering that they make $375 million in like one day. So they gave up one day's worth of pay. Um, Same thing here. Regulators in the UK open investigations for Meta's AI and smart glasses over captured images and maybe use the training AI system like EU, blah, 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 blah. Just the same drama that you always hear about. PEG ratio of 0.9. This is a record. Now, this one is a record low. In the last couple of years, this is like the cheapest it's been. So very nice with that. Because let's see, if we look at their expected growth here, we are looking at 25% revenue growth this year, 18% next year, gap earnings of 23 last year, 30 this year, and then 35. This is easily going to be over $700 next year. This will probably be over $800 next year. And when you look at it like that, with the way they're growing earnings and stuff, I don't think the stock's going to keep trading at 20 times earnings. The stock will trade at 25 to 35 times earnings. So it's probably going to be, I mean, what's 30 times 35 is how much is that? What is that? It's over 1,000, I think. Yeah, it's about 1,000. So, um, once again, they have all the users. By open sourcing its Llama models, Meta has turned the developer community into the R&D department. Llama has become the industry standard for open weights AI, commoditizing the underlying models of its rivals, Google and OpenAI, while keeping Meta at the center of the AI architecture. Meta is no longer just renting cloud space. This month, they signed a $27 billion deal with Neo cloud provider Nebius to secure NVIDIA's Vera Rubin GPU clusters. By owning its compute stack and designing its own chips, Meta is insulating itself from the rising cost of the AI arms race. Analysts are currently in a buy the dip mode, viewing the massive $130 billion capex guidance for this year as a necessary investment for long-term dominance. And that's sure the complete opposite perspective is what they had a couple years ago when they were investing in the metaverse. This year, or I'm sorry, last year, $24. We already went through these numbers. We just went through these. Ad impression growth, 1815. Okay, blah 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 blah. So average 12-month target around $850 about 12 months from now. I think that's realistic. Next year, like I said, in a year or two from now, the stock will probably be $1,000. And then, see, when you look at it like that, it kind of makes me want to buy more, even though that valuation is not sky high. I think, or I mean, even though the valuation is not super cheap, I think that valuation doesn't look super cheap here because their free cash flow and net income went down. But I'm sure these are going to trend right back up to, this is going to come right back up to new record numbers, right? And before you know it, they're going to be doing $80 billion a year in net income. I'm sure that's going to happen this year or next year. And when that happens, then those numbers, everything's going to look more attractive. So who knows? Maybe, especially if the stock drops more tomorrow, or yeah, if the stock drops more tomorrow, I might buy more. We'll see. We'll see. Because, in Amazon and Microsoft, my other, you know, big Mag 7 plays, I have way bigger positions. This one is like almost half the size as those other ones. So technically, I could maybe build this out a little bit more. I don't know. We'll see. And then look at this one. It says 4 years from now, optimistic models projecting a target of $2,500. Could you imagine a 5x on your money in this stock in just 4 years? Zuckerberg is deprioritizing the cartoonish metaverse in favor of AI integrated wearables. The winner is the Ray-Ban Meta smart glasses have become the surprise hit of this year with sales tripling year over year, which I see I'm not interested in that using it, but I do see some people using it. Meta is betting that the metaverse will be experienced through AI augmented reality in your face and not through a bulky headset. That makes sense. The CapEx black hole. If the 135 billion in spending does not translate into a jump in ad revenue for new subscription streams, the stock could crash to its fair value of 556. Well, we've already passed that. The EU's less personalized ads is a lingering threat. Blah blah blah. Once again, those are things that are been there for 20 years. Much of Meta's 2027 growth depends on the successful deployment of InVideos. Blah 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 blah. So you are buying the world's most efficient advertising machine at a 24 times forward PE. So I would say if I had no shares right now, I would definitely be buying. With my current position right now at 5 shares, I'm debating buying another share, but I would feel much better, and I definitely will buy if the stock goes to 500 bucks or below. Then I will definitely buy. Right here, it's still kind of in the middle for me. It's like, yeah, there's a little bit of risk, but I know I'll make money in the long run. I mean, we're literally touching down to almost 2024 levels that, the stock was at this price almost 2 years ago. So, that's my thoughts on this. I'm still super bullish on Meta though. So I think this stock is absolutely a buy and a great deal at this price. So let me know what you guys think down below, and I will see you in the next video.